All right, marginal tax rates. Talked about them a little bit earlier. Now we actually get to see them. So if any of you thought that the tax system worked in the way I'm about to talk, this is not true. It's when I started college, I was like, I don't know how taxes work. I don't know how anything works. This is how I thought it worked. I thought that if you made, let's say, $260,000, you just went, okay, let's look at the bracket. It falls between here. You say $260,000 times 35%, and that's what you pay. But no, on the first zero to $10,275, you pay 10%. Then on the amount between this, you pay 12%. On the amount between these two, you pay 22%, all the way up till here. And then let's say we have 260. So we say 260 minus 215, that gets taxed at 35%. And then you add all those tax amounts together. That's what your tax is. Now, important point to note, this is just an example tax bracket. We will have the real live tax bracket in the resources. However, it's not going to be absolutely critical. It's not like you have to memorize the tax bracket. It would be important to know the general numbers of it. For example, knowing that, generally the first $10,000, generally the next $30,000 in general, right? It's kind of getting an idea of the amounts. Also knowing what the maximum one is 37%. I would know that we have 10% and 12, 22, all the way up to 37. That just would be important to know and helpful. These marginal tax rates, these are the rates applied to the incremental income that fall within the specific brackets. Again, it's like filling up buckets. Think like you have a faucet. I'm going to use this buckets example throughout the course. We got a faucet. It's filling up water. First $10,000, it fills up here. Then it spills over into the next bucket up until $41,000. It spills up into here. And then let's say you only make $80,000. Then it would stop. You've got a little bit more in here. So 80,000 minus 41 times 22%. That's how much tax you would pay in this bracket. Now, in progressive tax systems, as a taxpayer's income increases, their income is taxed at progressively higher rates. This means that different portions of a person's income are taxed at different rates rather than the single rate applied, right? As compared to what I used to think it was back in the early days of college. The tax rates below, these are an example, and these do not reflect the current rate, dollar ranges. This is just for you to get a visualization. All right, now we see an example. Let's assume a tax system with 3 brackets. As promised, the examples can give it to you. It's not like you have to memorize those numbers, but it's kind of same in the general sense of what we're going to see here. Here we got 0% tax rate for income up to $10,000, then 10% between $10,000 and $20,000, and then 20% for income above that. So just an example provided. Seeing how this works, John earns $25,000 per year. How would his taxes look? Well, the first $10,000 of his income is taxed at 0% because it only starts at $10,000. So you're going to pay $0 in taxes for that portion. Then from $10,000 to $20,000, or $10,001 to $20,000, because we don't want any confusion there with rounding, that's going to be taxed at 10%. So you're going to pay 10% taxes, $1,000 on that portion. Then for the remaining $5,000, you're going to say from $20,000 to $25,000, that's going to be taxed at 20%. So you're going to pay $1,000 in taxes. That's going to be 20% of the $5,000. That's $1,000. So overall, John's tax liability is going to be $2,000. Now, it's important to note, this is something you may see on the exam, that John's marginal tax rate is 20%. So even though, if the question asked what, and this is semantics, right? This is just different words. If it said, what is John's marginal tax rate? Well, that's just going to be the highest tax rate within the brackets that John used. So that'd be 20%. However, that's not John's real tax rate. If we wanted to know the effective tax rate, and this is something you could say, what's the effective interest rate? The word effective means actual. This is something you see on other exams as well. Yeah, what was the effective rate? That is going to be taking into account really what John paid in taxes. That's going to be the average tax rate at which his entire income is taxed. In this case, what did John pay in taxes? John paid $2,000 and John made $25,000. So in reality, his effective tax rate, his real tax rate, his actual tax rate was 8%. This is the amount he actually paid. The outflows divided by the inflows. Now, this example demonstrated that a higher marginal tax rate doesn't necessarily mean that all of the taxpayer's income is taxed at that rate. Again, want to drill that in so you know how to do this. Rather, it is the rate applied to the highest tax bracket with lower rates applied to lower brackets. There we go. Another great one down. Lots of examples here. We know we love examples. They help us to prep for the exam. Let's keep going on and chugging through.
Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because Who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.